Okay, let's get right into the stock market technical analysis. If you guys are finding value in the content, drop me a thumbs up. Feel free to subscribe if you're new. And let's get right into the charts. So triple Qs, this is our tech sector. It's a little, it's a little choppy right now, especially today. So I'll show you guys what I'm saying and kind of give you guys my conviction on where I think we're heading. And then we'll get in some individual trades. The triple Qs right now, this one's a little choppy. So you can see here, we've got this gap right over here. It's just overhead. It's about 364.52. They gapped up today and they traded up to that 362.86 area. So again, if you're part of the private member group, I did notify everyone that I was going long. And we did go long, rode it pretty much all the way up into this area. And then I said I was going to, exit my longs just shy of the gap fill. So everybody who sees this gap, it's very obvious. So typically, you're not going to at least fill the gap on the very first shot. Sellers are going to step in early, and that's exactly what happened. So now you've got sellers stepping in. So here's where we're kind of at. We're kind of sitting in between support and resistance. There's support's about 355-ish. And resistance is roughly 361.72, and then that potential gap. Also on the hourly chart, you'll notice we didn't get an hourly close entering the gap. We did enter the gap intra-hour, but we closed back below that resistance level, and we got that sell down. So that was a level of resistance. Very, very obvious. I posted that in the private member group this morning saying we're at resistance, probably going to get a pullback. We got the pullback. Now that we're down here, it's kind of 50-50. I don't know which way it's going to go. It's not extremely clear. The buyers might step in and try to push this thing up to fill that gap now, which would be a move up right up to there, 364.51, and actually fill that gap. That's the upside before you hit resistance. Otherwise, they'll sell it down to support about 355. And, it could be a buy down there because that's obviously support, or we potentially break that support. And that was the entire move up. And now we're going to make the next leg lower. Okay, so because we're kind of in the middle of support and resistance, again, not very high probability in terms of the next short-term direction. Longer term, I still think we're heading lower. So that's really all I see there. If we take out the lows right here, and I have to go to the daily chart for that. This is your August 18th lows of 2023, and it's about 355-ish, and that's again where we just recently bounced off of right there as well. So that's the next major sell signal. You take that level out, nice daily close, not just like a little tick below it, but a nice impulsive close below it. That's for me, that's kind of an all-in short moment at that point, because that is likely going to mean we're pretty much taking out these lows and we're going to head probably pretty quickly right down to the 200-day moving average, which we're depending on where that's at. All right, so we'll watch for that one. Okay, let's look at some individual trade ideas that to me look interesting. So this one, Google. All right. Google, bigger picture, we're looking at the daily chart here. Obviously, you have your big bearish rising wedge pattern. Boom, right there. And we have a breakdown and sell signal clearly right there. So Google is sell the rip, all right? That's what this means. It means that uptrend was broken, and now you want to look to short into resistance, all right? Well, where would be an obvious level of resistance? What I see right now is we got a gap fill right there, all right? And that is about 133.70. So that's resistance. And then if they break above that, then it could potentially run for a back test of this wedge. Okay, those are the two levels of resistance that I'd want to short into. So right now we hit the first one, gap fill, and boom, they're selling down into it. So I think there's, I don't know if it's going to back test. Nobody really knows that, but it's at resistance and it's sell the rip. So it was objective to short right there at that 133.60. And then ultimately that means that we're likely going to come back down to support, which is about 127.20, and then break that support and probably fill this gap right down here. Kind of extend that out. Next level down, 122.54. So I like that for a continuation to the downside. Okay, wheat. So obviously wheat's taken a bath today. It's down about 4%. Good size move in wheat. That's on the larger scale. of what you see to the downside, but technically nothing's changed. This thing continues to just kind of do the same thing. It's really been doing the same thing. So you'll see here bullish falling wedge pattern on the daily chart. And I'll just kind of show you breakout, backtest, breakout, hit the 200-day simple moving average and had negative divergence. So it makes sense that it wanted to sell off there. Sold all the way down for a backtest of the trend line. There's backtest 1. And it's just been kind of treading water. And then today sold down for another backtest. So we're just right at support again. There's nothing technically changed. This thing just continues to kind of grind lower, just hitting support. And it has a large bullish divergence. So again, it's objective. It's an objective long. Every time it hits support, it's objective. Doesn't mean it's going to work. This thing can continue to backtest and continue to grind lower, but it's objective to buy at support. And that's exactly where we're at now. So I don't see a technical change here on this one. There's nothing that's really different than what's really been in play. The only thing, if you want to be conservative, you could look, if I roll out, there's some support, and which is now resistance. It's about 596. If I roll out, you can see we've got, there it is, pretty decent resistance, support right there. And we're below that right now. So if you want to wait for a recovery of that, that would probably make sense from just risk management standpoint, is to wait for a recovery of that $6 before maybe initiating or adding to the trade. Because this obviously could continue to just kind of grind lower, continue to backtest. So that's what I have on that one. This Newmont trade, this is gold miners. Still looks okay. I'm not really liking the price action that I'm seeing in gold in general today. So I'm just I'm not really getting super aggressive on this, but it does have a bullish falling wedge pattern. Okay, you can see it just continues to bounce off resistance. Lots of reactions to define this wedge. 4 on support and 3 here on resistance. And we have bullish divergence. So it's at support right now. So that is objective to go long at support, or if you want to be conservative, you could wait for a breakout of the wedge. Okay, those are the ways to play that one. So it's okay, but in general, the rest of the miners don't all look the same. This is just Newmont. Here's the GDX, the miners. The ETF. They're just kind of following this downward channel with no real divergence in place. So again, not my favorite. Mastercard. All right, so this one's just fresh off of a sell signal on the daily chart. So I still like it as a swing trade. You've got bullish or a bearish rising wedge pattern on the daily chart, big negative divergence, and a confirmed sell signal right there. Then you can see kind of what's going on. So we have a level of resistance, which is about 402.24. That was kind of a former high. I had that marked out. We got the sell signal, broke down, it came in for a back test, but it got sold into. So to me, this looks like it's bear flagging. Looks like it's kind of just flagging out right here. So maybe tomorrow it's up again, just kind of holding that flag, but it does look like it's bear flagging right here. So to me, I would, what you want to do is you take the flag, there's your flag pole, and then you just kind of take the measured move of the flag, which is something like that. And you can see it's basically setting us up for a move down to the 200-day moving average down here. So that's the objective target. That's the projected target on this pattern. And whether we get an update tomorrow, if it holds the flag, this pattern's still intact. Home builders, PHM. Again, this one still looks like it's right at resistance. We've got some support. It's right there at about 75. Trading below it, rallied into that, but still below there. So getting rejected today. Not aggressively impulsive, but getting rejected. So as long as we remain below that 75, then this should continue lower down to the next level of support, which is about 65. So, and then potentially a minor level. Looks like there's kind of a minor reaction somewhere right in there. Halfway point, about 70.50. General Electric, no sell signal, just a setup, but I haven't forgotten about this one. So this one, you've got kind of this upward bearish rising wedge, and it broke down. You had a sell signal, but it's really gone nowhere. It's just kind of holding this support. So right now, the next sell signal, and really the major sell signal on this one, because we haven't had extremely impulsive selling, comes on a break of about, we'll just move it down to the absolute low, give it the benefit of the doubt, and it's about 109.80. Okay, impulsive daily close below that level would signal a major sell signal, and we should start to see this thing head lower. Minimum target, the 200-day simple moving average, and probably a slightly lower down to about 90.03. Interest rates continue to really hold their ground, pulling back a little bit today, but in general, here's your bullish trend on the daily chart, and that has not changed. Still have a bullish trend on interest rates. So, we are starting to see some negative divergence build on the PPO, but nothing really on the RSI. I mean, maybe slightly, but I don't see enough here that tells me this trend has changed or is about to change. I mean, there's no sell signal. So as interest rates continue to rise, it's going to continue to put pressure on the market. Now we could have a little pullback. Maybe you get like a 1 or 2 day pullback, something like this, back down to trend, and you probably see the market, especially tech, have a 1 or 2 day bounce. But that's still not going to change the technical picture. And then as long as this trend's intact, expect rising yields to continue to put pressure on tech stocks. And ELF, this one, again, on the daily chart, you've got a pretty solid uptrend right here. Clearly taken out with a sell signal right there. It's back on the September 19th. Sell signal flagging out. And then, so this one is projecting that we continue to the downside. So what you want to look for on this one is a break of this flag right here. You want to go down to the hourly and kind of draw that. You break that flag, and that would signal that this is likely going to continue to the downside. Okay, and that sets it, let me grab that right there, trying to grab the right thing. And that would set this up for a move down to about 86.78. There's a big gap to fill. So that's the projected target right now on this ELF. And again, just waiting. You just have to wait for that flag to break down. So probably not going to happen today. Next week looks likely, maybe Monday or Tuesday, for a breakdown of that flag and continuation downward. Okay, in general, that's all I've got for today. So guys, I'm going to get the video out there. Drop me a thumbs up. Check out my stock market technical analysis course, and feel free to join the private member group if you're interested. Appreciate you guys following along, and I will catch you guys on the next one. All right, take care.